So there have been a lot of buzzwords being thrown around by primarily realtors, saying that if you buy a house, there's lots of tax benefits, or there's a tax credit, or tax breaks that you get for buying a house. And while that all sounds nice, they're all different things. All these words: tax breaks, tax benefit, tax credit. They're all different things. They don't necessarily exist per se. And so I just wanted to clear the air on that. And what are the actual tax advantages of buying a house, if any? Is it a waste of money to rent instead of to own a home? We should talk about that too. And which is better? In the long run, in the short term, really what it comes down to, as you'll see, is it all depends on you and your situation and what your finances look like. So many years ago, there was something called the first-time homebuyer tax credit, and it was a credit that you got off your federal income tax bill when you purchased a home for the first time. Now, that expired a while ago. That does not exist anymore. There's nothing like that currently, at least on the federal level. You might check on your state to see if there's anything like that exists, but currently on the federal level, there's no home buyer credit. So simply buying a house, like just the act of buying a house, will result in zero tax benefits. Okay. Now there's other things that could be seen as a benefit, and that's the mortgage interest deduction and the real estate tax deduction. And for the purposes of this video, I'm just going to talk about buying a house for you personally. I'm not talking about buying a rental property or any business-related property. Okay. So in terms of buying a house for you personally, no tax benefits for simply the act of buying the house. But if you incur, if you had to take out a mortgage on the house, then you may get to deduct mortgage interest that you spend. And obviously, if you own a property, you're going to pay some sort of real estate tax, some property tax, and those are also deductible potentially for you as well. So before we get into the mortgage interest deduction, I just want to make it clear of how this may not actually be considered a benefit per se, because you're still netting a loss in terms of paying mortgage interest. So what do I mean by that? Well, if you spend $100 in mortgage interest for the year, and let's say you got to deduct that $100 off of your other income, that's called a deduction, right? It lowers your income by $100. That's not your tax benefit. Your tax benefit is how much of a tax that saved you. So $100 difference, let's say you get taxed at a 20% tax rate, the $100 difference will result in a $20 decrease in tax. You see what I did there? $100 times 20%, $20 decrease in tax. So basically you spent $100 to save 20 bucks. You still spent a net of 80 bucks. So you're still losing money here. So that's why I want to be careful with calling this a tax benefit. But as long as you can understand that concept, the rest of this video will make a lot of sense, and we can just move on. Same goes with the property taxes. Same thing. It's a deduction that you may be able to take. It decreases your income, but it's the tax benefit is just a fraction of what you spent. So in order to take advantage of the mortgage interest deduction and the property tax deduction, you have to itemize your deductions on your personal tax return. And in order to itemize, you just have to make sure you have enough itemized deductions to exceed the standard deduction for it to make sense. And this applies to most people. There are some cases where you either have to itemize or you have to take the standard deduction. But in this case, this applies for most people. As long as you can itemize your deductions, you have donations, medical expenses. You can also have mortgage interest. That's where it goes on the tax return. And you can have property taxes. That's also where it goes, is on the itemized deductions sheet, Schedule A. All right, so with those two things, the mortgage interest deduction and the property tax deduction, that's really all the very immediate tax benefits that you might get. But if you were to say get like solar panels and energy efficient things that may qualify for tax credits, those are additional tax benefits that you might get. But again, you're spending a ton of money to get a little bit of a benefit. So, I always tell my clients, don't make decisions purely for the tax break or the tax benefit, because you might end up actually spending more money than you would have. So really consider if buying solar panels is really what you want. If you've been wanting it and the tax credit is just like a nice little bonus for you, then that's great. but do not buy solar panels just to get the tax credit, because you're probably gonna be spending $30,000 to get like a $5,000 tax credit. So that's not a smart financial decision. Now, the other thing I want to touch on is it a waste of money to rent versus to buy your home? And some of you might disagree with me, but I would say it's not a waste of money, because you're not throwing your money away. Like, a lot of people say that you're throwing your money away on rent, you're just throwing it away, but you're not. You're buying a place to live. You're buying yourself time to save money for a house, potentially. Some people cannot afford a down payment on a house. And there's mortgages out there that allow for like 0 down payment or very little down payment, but there's increased costs like mortgage, insurance, things like that could increase the cost of the monthly payments. Where renting is simple, you just pay a monthly rent, easier to be approved by the landlord or by the the management company. It's much easier, in my opinion, than to be approved by a mortgage, for a mortgage. Okay. The other thing too, some people compare the cost of a mortgage payments versus the cost of rent payment. And the rent payment usually ends up being higher than the cost of the mortgage payment, right? But there's things that sometimes they leave out of this equation, is that on top of the mortgage payment, there's like hazard insurance, there's property taxes, there's HOA fees that you have to pay, utilities, lawn care, maintenance, all this crap that you have to consider when you buy a house. Whereas when you're renting, usually the landlord or the management company takes care of all that stuff for you, because that's what they do. Sometimes you pay utilities, sometimes you pay water, but usually like maintenance, they take care of for you. If you live in apartments, you don't have to worry about lawn care. That's all taken care of for you. So really, in my opinion, renting is not a waste. If you want to own a home someday, renting is just a way to buy you some time while you save up to buy a house with a decent down payment. Otherwise, if you don't put a decent down payment on, you're going to be paying a lot of interest in the long run. And just because you're paying interest and you get that tax break, the tax deduction, that's not a good thing. You want to pay as little interest as possible, even if it would minimize your tax deductions, because you're paying less interest. And paying less interest is better than paying more interest and getting a bigger tax deduction. All right? Well, I hope that was helpful. Again, lots of buzzwords being thrown out there by people in the industry, and I just wanted to clear things up. There's no tax breaks for simply buying a house. There's definitely some tax benefits after the fact if you have a mortgage, and if you pay property taxes, there's some benefits you can see back if you itemize your deductions. All right, take care for now. Hope you all enjoy the week, and I'll see you next time.